Arun, as an angel investor, and I underline that, investing in early stage companies, you know, what is your approach going to be in the months ahead? Any real change or not really? Because, you're going to keep doing what you've been doing. And also, thoughts on how you see the startup ecosystem shaping up in 2023?
Yeah, I think personally, what I would say is that, a lot of us I've been doing this for about 10 years, investing into early stage companies, and I've generally tried to be a bit consistent through the years. But obviously, last year, I thought things were getting a bit out of hand, and I took a step back. But what that does is it makes me feel even more bullish about investing in the coming 12 to 18 months, because as Ashish and Ritesh will also tell you, that the best companies actually get founded in downside, right? Because not everybody wants to just jump from the company they're working and just start up, raise a fund. There's a lot of uncertainty in the market today. So only the ones who are extremely sure of what they want to build, how they want to build it, and who's going to join them early on in that journey will actually start. So the pool might be smaller in terms of the number of people who want to start up, but the quality also goes up much higher. So from an angel investor's perspective, I actually think it's a very interesting time going forward. Uh, as an ecosystem, what I would say is that I used to work in equity capital markets myself, right? And what has happened now with the first few companies that have come out of the stable, uh, that are tech or new age per se, they've all had a bit of a reality check in the
Yes.
market in terms of what you're actually worth, right? And I think it's not really any one person's fault. Like, for example, there are a lot of bankers who really want to give you that valuation because, the higher the valuation, the higher the fees you get. And, everyone's got an incentive to push that highest price. But what I think has happened, since some of these companies are listed, is that there's a market reality to what your business is actually worth, right? What someone's willing to pay for it. So if anything, I hope that the future companies that are raising, growth rounds, or they're potentially looking to list, will take the learnings from what happened with the first few and realize that, maybe we can do it a bit differently. And not everything is about listing at the highest price, because IPO is just a point in a journey, right? There's so much more you have to do from that point. So I think the whole ecosystem has a lot to sort of imbibe from the last 12 months. And I hope better decision making prevails. And it's not a room full of people who can just help each other extract the highest value and then pass on the bag to the next bag holder, right? Like I think that I hope, as a learning itself for the industry and the ecosystem will kick in. And if it does, I think we'll be a lot more mature going ahead into the next cycle. And the companies that do come into the public market are going to be a lot more sensible in terms of how they view metrics, right? And that will just be better for everybody as a whole.
Very
Uh,
important point, and sort of fingers crossed. Ashish, did I interrupt you there?
no. I just wanted to add one more thing to Arun's previous point and this one as well. I think the banker being incentivized to give the higher valuation or get the markup or deploy more capital, I think that can lead some of the crazy valuations. But I think, Arun, one thing I don't know, you didn't say that, but I don't want it to be missed, is that the burden of due diligence, to get to that next round and get to that valuation number is actually and should not be forgivable, to the VCs, to the bankers, to even the big four and big eight who are involved. And as an entrepreneur, and as well as a small angel investor, I think I often, feel when I see that, okay, a founder is definitely being shamed for not doing the right thing, and absolutely, they're responsible for it. But nobody calls out, let's say the VC or the banker or even the the big fours and big eights and agencies who were third party, who are giving that certificate out. I think it is a collective responsibility, and I don't think that as you said, Go Mechanic or any such company which goes down and sounds like a scam or gets into the media for wrong reasons. I don't think it was doing of one person. The founder has to take the blame because he's the leader of the ship, but I don't think it was one person. They all were colluding at different levels, some
All
knowingly,
culpable.
some unknowingly, maybe misplaced incentives, but that needs to stop as well.
Oh, great point you've made, Ashish. Ritesh, you're both an entrepreneur and an investor. What's the summary advice you would give to entrepreneurs and what you're going to be looking for as an investor in 2023?
I think the first one is be very wary of raising capital and be very wary at what valuation you're raising the capital. Always remember that at raising capital is more of a responsibility than a vanity metric. Unfortunately, our media also, I think our media is also to be blamed there. Our media celebrates raising capital. Until and unless we raise
I said that right at the start of our conversation. Media culpability.
Yeah, so I think founders, because incentive is that you will get covered if you are raising capital, you will get covered if you are doing this. I think the most important thing in the entire story, the hero of the entire story is your consumer. Price your product well. A lot of founders are not pricing their product well. I think pricing is one area where you really need to ensure true value is being added and true value is being extracted out of that product. I cannot the cycle of this, that I give Ashish bhai 10 rupees and I ask him to give me back 9 rupees. He will happily do that, and if I do this consistently over and beyond, it will be a very difficult thing. And the last thing is, a lot of founders are chasing the wrong PMF. I'm telling you again and again, this is the biggest mistake. I meet founders and they don't have their product market fit right, and they are scaling the wrong PMF. Once you scale the wrong PMF, the whirlpool of shallowness creates such a large deficit of pressure that at one point in time, it actually bursts out. So I think when make the right PMF, take time. I think a lot of founders want to have this sprint, and we need to have a marathon. Do it for a long time, and be patient. I think that is very important. Say no to a lot of, because the day you raise your value, the only reason I was able to sell my company was we did not have any venture capital stopping us on the board that no, you cannot sell it at this valuation.